Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 27th, 2018. In this video, I wanted to highlight some potential trade ideas in the automotive sector. What I want to do is start out just reviewing the last update I did on the automotive sector. We'll go over some charts there and just look to see how they played out. And I want to do that for twofold. Number one, of course, follow up, show you how the charts have played out, which targets were hit, and also to impress the point that the vast majority, by far, the vast majority of trade ideas on the right side of the chart are things I throw out either in videos on the front page, sometimes static charts with notes, and then for every front page post I make, there's 20, 30 more trade ideas in the trading room. Just it's to make those all official trades is just too much work. And there were reasons. Back when I did this video, actually it wasn't a video, it was a front page post. It was January 18th. A lot of these automakers were about to report earnings, so I held off as official trade ideas and just kind of dropped the ball on, didn't follow up. But quite a few are set to report now, but some have already reported and got that out of the way. So I want to go over that, and I'll cover earnings on these, the ones I like, and give you some trade ideas. And this time around, we're looking back then I was bearish on the sector, and now I'm looking at a possible bounce here. So we're looking at some potential long trades. So this is started out on that post with this chart of auto and light truck sales, and this goes all the way back into the late 70s really. And what I did is I modified this chart. I put my own little shaded yellow area, highlighted area, which is the upper end of the range, excluding these brief spikes. Those are aberrations, if you will. So this is really where that tends to top. I can see like support right here, support there, or resistance there, and we're in that range. So we're still there. And a couple takeaways from this. Number one is that even though we're at the high end of the range, that high end of the range can last a long time. It can be very brief, or it can last for years. And so far, it's been going on a few years here. And since then, just to show you what's happened, we played out a little bit. You can see they have dropped as forecast, but we're still in that upper end of that range. That shaded box that I had there was really right about this, really between these lines there. So that's that. And I know that recently the automakers had benefited from the tax cuts, but they're also, that was offset, the savings. There was a chart. Let me see if I can find that for you. I don't know where it is. It's buried in it. It came in from the Wall Street Journal the other day, and it just basically showed you a bar chart of the savings that they had, all the big three automakers from the tax cuts. But those savings were negated by the increase in iron and aluminum, or steel and aluminum, excuse me, due to the trade wars going on. So that spiked their costs, and that's put a little pressure on the earnings. And again, I'm a firm believer, and I talk about this all the time, that the charts price those things in ahead of time. This is no surprise that they've dropped. Here's the chart going back to, let me close that window down a little bit and bring that chart into view. There we go. So here was the automotive sector MG331 on TC2000, and again that was mid-January there, and I showed it going down to at least this level here, 475. Had a divergent high, waiting for confirmation on the divergence and everything. And let's just take a look at what happened since then. That's MG331, and we were right about here. So this one played out to the T. The divergences I was looking for were confirmed. That confirmed the divergent high shortly right after that post. And this is that same ascending price channel. You can see technical analysis, and this is a sector, but it just amazes me, or never fails to amaze me, I should say, how well this works. We broke down, we hit my first target to the button there, came in, back tested. I have not modified these lines since, and then rolled down, and we hit this level. This is a pretty solid support level. So the reason I'm doing this video again is to not just update what happened, but show you that we have now hit a pretty decent support level. We hit it once already, and we've been moving higher since. And at this point in time, we have potential. It's unconfirmed, but potential divergence, and that's what I'm looking at here. And there's also a little bit of support right here. Ever since we hit that 445-ish level, you can see these were the previous reaction lows right here, and that's right about where we're at now. So there's a potential, and I'm looking for a bounce trade, and that bounce trade might take the sector up to about this level here, which is a little bit above that resistance line because we traded through there, so I'll call it about 485 or so. So that's kind of a macro view on the sector itself, or the industry, I should say. And now just let's look at the then and now charts. This is TM, Toyota Motor Corp. And of course, I'll get to today's charts and show you the outlook. Again, mid-January, we were at 138.69. Pointed out the overbought readings, 10-year weekly chart, and showed us going down here at least that 122 level. And then there was also the daily chart. Had us coming down here to 127.24 on the daily chart. And let's see where we're at now. TM. There we were, mid-January, right at the high. So from there, it played out almost to the day. That was January 17th. So yeah, literally, I did the post on the 18th, and it played out immediately, and we came down, and there's that 127.24. I've added some lines to this chart, but this line I'm highlighting, that was it. So we slightly undercut my target there, and we've since set up, and again, this video is more about what's going to go happen from here. We're in a symmetrical triangle pattern defined by this line and this line. Symmetrical triangles can break either way. Um, and there's not a lot I can take from this chart, at least on the daily chart. But when I look at this 60-minute, oh no, I didn't have much on here. This one is one that I would just stay away from. It's a little bit, chart's ambiguous. It's not very clear to me. This was clear: divergent low, breakout, falling wedge, things I like. Here we had a divergent high, breakdown and back test. Right now, we're not even at the top yet of the triangle. Plus, they report earnings on August 3rd, so let's just not focus on Toyota at this point in time. Maybe after August 3rd, we might have a trading op, especially if we can either, maybe a breakout or break down from this triangle pattern. We'll see. Next up is Ford. Back then, Ford had already started to correct. Was the first to really break, and pointed out there was a little more downside here at least 1186 before any type of meaningful bounce. And from there, we go here and go to Ford, and that was right here. We were right about where the crosshairs are, and we went down, and sure enough, there's your reaction. It wasn't much of a bounce. It wasn't very meaningful. It was a reaction, 1, 2, 3, 4 candles. So we hit it, traded there for 4 days, and then gave up that level with a big impulsive candle. Now, Ford's come full circle since then. So it continued, as you can see, to just slide. There was a divergent low here. That divergent low led to a rally of about 27, 28%. We had an uptrend line right here on this advance, and we broke down, and this one's been in free fall again. It looks a lot like that last slide, but it's usually after these big slides where your opportunities come. There's a lot of the market quickly values in. Look at it's a P ratio right there, 5.48. So it's a pretty cheap stock right now. Yeah, they have their problems, but again, is it priced in already? As a trade war, is it slowing auto sales? Everything, because the big three did recently come out and announce their auto sales are sluggish, or forecast was pretty weak due to the trade wars. But let me put my phone on mute there. So that's that. Here's what we're looking at. Right now, we are in free fall mode. The indicators are pointing lower. When you zoom in, see, we don't have a bullish crossover yet. If we get a crossover soon, and that's what I'm looking for here, we'll have a big, powerful divergent low. You can see the RSI, we're at oversold levels. Oh, excuse me, something else I like about it. Last time we were oversold was right here. What happened from there? Well, big rally. And that was deeply oversold. These were just regular oversold readings, and they, usually produce big bounces. So there it is, oversold, potential divergence. So I'm on the lookout for a reversal here. Earnings are out of the way with Ford, so we don't have to worry about that. They just reported. They're not going to report again until October 24th. So there's one that's on my radar for potential long. Here's a long-term chart. I don't have a lot mocked up here, but I do see divergence. I could draw it out there, right there, versus here and here. So there's some potential divergence on that weekly chart as well. So there's Ford. That's one trade idea. And again, if this or any of these become official trade ideas, I will follow up with explicit price targets, suggested stops, position size adjustment, beta adjusted position sizing, and all that good stuff. Okay, moving on. This is Fiat Chrysler, FCAU. This was a chart back then, mid-January, showing this scenario. We had a price channel here, moved down to the bottom of the price channel, bounce, and showed you these targets, and eventually move all the way down here, possibly. But we didn't get all that much. We did. It certainly played out for the correction I was looking for, but this one's been stronger than some of the other ones. Let's look at that here. FCAU and so there it is. There's a breakdown of that same price channel. I actually went on to back test the channel and then rolled over. We hit that first target of mine, 1845, and now that second target, 1655, and that's where we're at. So if you want to know what I still think we head down here ultimately to this level here. That's about 1164. So I'm not looking to own these things this late in an economic cycle with auto sales, already at multi-year highs for a while. That's not going to stay that way. All I'm looking for is a swing trading ops. Even if we bounce this one here from support, 1655, which you can see we're already 3 days holding that support. And again, this was the same level. These were the same levels identified back when it was in this channel, and you can see we hit the first one, we bounce. That's why I have multiple price targets. You can trade these as you want. There's usually a reaction on the initial tag of each price target. So you can reverse a trade, you can book profits, reshort it here, trade it however you want. Or if you're not an active trader, just hold on, pick your target. So had you held all the way back through here, you'd be there. I don't know where we were, somewhere. You would have already made about 30% on that short trade. But now we're at support. I can see potential divergence here on the PPO. Potential means I need to see a bullish crossover there. But if we bounce up from 1655, even if we just come to the bottom of that gap, that's about a 6.5% trade. Not bad. And if we make it back up here to that 1845-ish level, you're looking at about 11%. Let's see how that 60-minute chart looks. I'm not crazy about the 60-minute chart, but this one's on watch for a potential trade. And again, I do these videos, if you're looking for trade ideas, or maybe you have exposure to the automotive sector, hopefully these videos are useful in that aspect. Next one up, and by the way, when you click on any chart, even if it's small size on the site, they'll expand to fill your screen, and then you can see this little arrow. So anytime you move the cursor to the right-hand side of the screen, you can advance to the next one, you can go back, if you have a scroll wheel, you can zoom, you can drag them and pan them, all kinds of good stuff. And if you don't have a scroll wheel, just grab at the bottom, there's those little dots right there. If you grab that, that allows you to zoom the chart as well. So let's zoom this one in and pan it down here. Oh, we already looked at FCAU. Next one up was GM. GM, it said the ideal scenario for swing short on GM would be for the stock to put in a marginal new high and divergent before reversing. However, the PPO and RSI are starting to roll over, so GM might not have enough gas in the tank to do so. All right, that was then back in mid-January, and this is now GM. And it did not have enough gas, especially with all the other stocks rolling over. This was where that was drawn. It would have been a divergent high, but it didn't have enough gas in the tank. That was it. Fell down, and this 36.40, I think. No, I didn't. I didn't have any target. I just showed you it going down. I didn't have a target listed on that one. But back to GM. But here's where it is now. This is more important again, where we're at today. Earnings are out of the way, so you have a green light to short this one. Barring any unexpected news event, the gap should be over. Here's the earnings gap right here. You can already see that. So this is why I avoid stocks heading into earnings. It's a crapshoot. That was the earnings induced gap. This one, I don't know what that was. That was something else. But this one, I believe, was an earnings gap. That makes sense because, yeah, they would have reported on or about July 24th. So now we have both horizontal support right here. These were reactions back here. Not the most solid support line, that 36.40, but we also have a long-term trend line here. In fact, I need to go back a little bit farther. So here's a trend that comes off 2015, very well defined. Look at all these reactions here. So My point is this one's just a pullback to support trade, whether it's you want to hold it long term or just trade a little bounce. And support can break. We could fall down here, but usually, from my experience, you get a big move down. See this move down. This to me looks like a bear flag. You had an impulsive move down. Here's your flagpole right here. This is your bear flag. I'm sorry, the flagpole was the initial move down. There's your bear flag, and we played out. Now, sure, that flag measures a little bit lower. And so maybe we do punch through here temporarily, that long-term trend line right there. But I think we recover just because the stock is pretty darn oversold right now. This is a daily chart. You can see we hit that 30 level. That's oversold on the RSI. Last time we were oversold was right here. And if you bought the stock the last time it was oversold, it rallied 31%. So, pretty simple stuff. I like to see either oversold. Sometimes you get what I call a one and done reading. Sometimes you get persistent oversold, and you can have a positive divergence there. That's what we had this time around. So the initial oversold reading didn't do the trick, but we had a series of higher lows in the RSI right there, and that's positive divergence. So those are the things I look for. So, but I like this one because it's oversold at support. So there's GM, green light because they don't report again for 3 more months. So there's a trade idea for you right now. And minimum, I'd be looking for a gap backfill. So what does that mean? If you buy it here, you pop up to about $39. You're talking about 5.5%. Not bad for a swing trade. Get in, get out, move on to the next one. Okay, the next one up was Honda Motor Corp, HMC. This is showing you this series of, watch, rinse, repeat stuff. Divergent high, short it. Divergent low, go long. Divergent high, get ready to short. Trend line break is your sell signal, et cetera, et cetera, et cetera. And that was, stock was at 35.89 right there at the, mid January. And that's HMC. And here we were, mid-January, we're right about here, punched up, made another divergent high, and went on to, hardly went up from there, a couple, 2% or so, broke down, back tested, and then you had a drop of about 22.5%. So again, these were all unofficial trade ideas at the time, but hopefully some of you guys caught a piece of these. And now I think it's time maybe to go the other way for a little bit. July 31st, before the market opens. So here's one. I'm not crazy about the chart right there, but there's support. This line right here is decent support, but it's about to report in a few days. You have to have heads up. I don't have any positive divergence there on the 60-minute chart. Not crazy. That was a daily, by the way, before. This is a 60-minute chart. Not crazy about that. Let's let this one report and then see what happens. Maybe we'll get a shot at to pick this one up at lower levels. Or, these could turn into shorting ops if all these support levels break. If the automotive industry has topped, that's the thing. These bullish chart patterns will stop working in a bear market or stop working as well as when we're in a bull market. So that's something to look for there. But here's HMC. Okay, enough of that was then. This is now. We're just look at this is now stuff and wrap this up. So a couple other ideas. Tesla is choppy. Tesla's in a nasty, hard to. Well, actually, it's traded well to the technicals. There's a couple members on the site that trade this one, and but for the most part, for swing trading, it's been kind of tough. I did point out here these oversold readings. Pretty simple strategy. It works well or has over the last year or so. Just buy when it's oversold, boom. But you need targets, and here's the targets. Be the top of this range if you go long Tesla. Now, I'm not crazy about it, but the 60-minute chart's setting up right now. I have to point that out. This is a wedge type pattern. You do have a fairly well-defined downtrend line right here to maybe trigger a long entry. I'd have to zero in. If you're interested, let me know and I'll work up some targets. I certainly see resistance right about here, around 310. Needs to take that out as well. And then I would put a target right around here to 326. Now, this one may or may not break out now. What happens is trend indicator is below zero. That 9 EMA, the signal line, that white dotted line, is below zero. It needs to get above it. So if these divergences play out, I should have had this divergence line drawn too. We could get a pop here in Tesla. Again, not one of my favorites. I probably shouldn't spend too much time, but I just wanted to cover the whole sector while I'm here. I already covered Ford. Yes, I did. And Fiat Chrysler race. This is Ferrari. This one's scheduled to report. So now this one I'm actually not bullish on. I think Ferrari is looking toppy to me. We had a divergent high right here, at least RSI divergence. We have a trend line to watch here. So this is one I would not be interested. It might have another thrust up, but it's not the kind of stock that I chase. I'd rather wait for this one to break down. So I have support here about 131.37 with an uptrend line. My guess, based on look at this chart, they're going to disappoint, break down, and then this is your target right here, 103.50ish right there would be your initial target on race. TTM, Tata Motors, this one looks nice, bullish falling wedge, doesn't report until August 22nd. Positive divergence, so look for a break above this wedge. Actually, it's cracking today. It's taking that wedge out. I don't have a lot. This isn't a super well-defined a downtrend line. So let me move it up there to give it the benefit of the doubt. This one you might want to watch this level as well, 2031. I'll have to work up some targets on that one, but not one of my favorites, but definitely I'd rather be long this one than short this one. BL, BD, Bluebird, they make buses. I don't see anything there on the chart that I like. KNDI, auto manufacturer. And oh, here's one that's not in the sector, but when I was on vacation, I go up to North Carolina every year. And I was there a couple weeks ago, and there's a friend of mine works this company called the Rev Group, and they manufacture ambulances. At least this company actually does a lot. You can check out their website. They make fire engines, they make RVs, they make all kinds of um, equipment. So it should be in that sector. But in West Jefferson, North Carolina, tiny little town, or Jefferson, North Carolina, they have a plant where they make ambulances. They make a good percentage. I forget, he was telling me how many they make, and it's a good percentage of all the ambulances produced either in the country or at least in the southeast or the east coast of the United States. So, and business is booming. And so, anyways, that made me take a look at this stock. They do report August 3rd, but I like the chart. You have a downtrend line right here. This is the downtrend line I'm watching right now. And more importantly, probably as significant or more, is this 1693-ish level. You want to be safe, round up, call it 17. But you can see here this stock has been pushing on there. Now, first of all, put in a divergent low at the lows. We had bullish divergence. That's what I like. And from there, it rallied. We got the rally out of it. And I think there's more to come. Look at all these reactions here. That 1693-ish level acted as support there, and it's acted as resistance since. We just hit it yesterday again. So you look for a pop above 1693. First target here. I need to tighten that line up just a little bit. I can tell you that would be about 1857. That's the actual resistance level. So you might want to put your sell limit order a little bit under there. And what does that mean? It doesn't look like much on this chart, but that'd be a nice pop. That'd be about a 10% trade. Then this is a potential downtrend line. There's only two reactions, but they come in close together. So watch for that. Watch for a reaction off this downtrend line. And then longer term, this one has the potential, I think, to work all the way up here to about 23.47. So this is probably the most promising long side trade in the sector. You'll see, and again, when you look at most of the sector, automotive sectors, it doesn't include it in there. It's just one that I happen to stumble upon. So maybe a little hidden gem here. We'll see. That's REVG. All right, we'll wrap it up here. And if you have any questions on these, or you're interested in any of the trade ideas, if I don't make them official trade ideas and you want me to zero in on some price targets, if you are a gold member or a free trial member, drop me a line in the trading room and I will be more than glad to post a chart with some targets on there. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.